Good morning. Welcome to the XM.com weekly market update, and we're joined once again by Peter McGuire, the CEO of XM. Pete, good morning.
Good morning, Andrew.
Once again, data galore, volatility
Yes.
Galore.
Well, yes, I got a bit of a laugh because what we experienced last week was just showtime. So yeah, there is data and it is galore.
And it's going to be ongoing for months by the looks of it.
Yeah.
Once again, we'll start domestically. The Aussie dollar, it's come off its lows there around that 64 mark. It has bounced slightly. Obviously, we've got the RBA rate decision today, which everyone is expecting 50 basis points.
Yep.
It might come up a little bit from there, but it's
probably already baked in.
You would think so.
Yeah, hit through 65 in Asia trade this morning, so I wouldn't be surprised that you see that you might get another 0.5 cent out of it. If they only give us 25 basis points, we might be languishing in the 50s.
Yeah, well, there's a lot of talk about the impact of these interest rates at the moment, so on the housing market and whatnot, and the pain that is being felt in the market. So,
Yep.
and once again, due to the strength of the US, a lot of currencies are struggling.
Absolutely, and there you look at it, we're at 6.8% inflation, so there's no doubt that the bank has just got to do whatever is needed, and all the central bankers are looking at it. So we're joining the club, aren't we?
Yeah. Interestingly, the inflation numbers are going to be monthly moving forward.
Yes, looking forward to that.
Yeah, which I think
more surprises for Christmas.
Well,
good or bad.
But once again, it's probably common sense. It's having a
exactly.
quarterly figure seemed a bit silly in this day and age. But anyway, so moving on, the Kiwi. So interesting there, the Kiwis, they've been hiking a lot quicker.
Very aggressive.
Yet the currency has struggled.
Yes, absolutely, and we're languishing around that 56, 57 cent mark. And not only that, there'll be another 50 basis points for the RBNZ this week as well. So both us and across the ditch have a crack at it. And then you look at those numbers, you know, it really is a bit of a, you study that graph in depth and spend, 20 seconds on it, it really tells a very interesting story about RB.
Yeah, and I think, and the Kiwis, they're talking, the guide is to get to 4% or just over at this stage. So they've still got a little bit of room to go.
Yes.
Their housing market's pretty similar to ours. It's been hot for a long period of time. So that will be something that will get impacted on the back of this as well.
Steam's coming out of it.
Certainly is. Manufacturing numbers came out overnight.
Yep.
It's coming off slightly, hence the rally in the equity markets, which was a huge night overnight.
Oh, it was boom. I tell you what, I caught it from around about 5:30 onwards. I was watching Bloomberg and it shut at 7 a.m, which is a little bit better for us. And then we go to 8 a.m. when in a couple more weeks when the states come out of daylight savings. And there it tells that story. We had a very strong move. Dow was just ballistic there for the last couple of hours of trade off those numbers, as you mentioned.
Yeah, so a huge night overnight. Non-farm payrolls obviously come out later this week.
Yep.
Another big number that the market reacts to. So, it'll be interesting to see what that shows up again.
Well, we're looking at 250,000. It won't be as strong as what we saw in 315,000 for August. We've got an unemployment rate of around 3.7%. If it hits that 250, then that's been baked in, and that's a confidence that all the analysts are saying. But as you know, many bankers and analysts across the globe say, oh yeah, it'll be 250, and all of a sudden it hits 500 or 100. So we sit here in trepidation waiting for that number to drop Friday night our time.
Yeah, so it's the market. It has a huge impact on the market. So, similarly, the jobless claims, it's telling us the job market is still very strong in the US as it is here.
Yep.
We're not seeing any real impact to unemployment at this point in time, but time will tell as we head into the end of the year, the impact of the higher interest rates.
Exactly right, and they're saying, is it going to be a red October? Because traditionally, and if you look at the forecasts or the analysis moving back, we had depression in 29 October, we had 87 October. So are we going to follow suit? There's a lot of uncertainty out there. We'll just have to wait and see, but I won't be surprised for a surprise.
Yeah, certainly. Over to the UK. We sat here last week and the British pound was at 103.50 or thereabouts. It's now around 113, 114.
They say there's no movement in the currency markets. Have a look at that. Is that a V-shaped recovery at the end there?
Well, it is at the moment. Now, how long it's sustainable is the question, I guess. But obviously the UK government backtracked on those the tax cuts, which
do you believe it?
Seemed ridiculous that they were even announced.
Yes.
But who knows? But hence the rally there. That's then obviously added a little bit of confidence. It may be short-lived, but we obviously saw the yields come down and the gilts and the US Treasuries, whatnot. So,
Yeah, exactly. You know, and there may be a little bit further push up, but it's so hard to, on such volatility, it's very hard to forecast. And no one in their right mind would say, well, we're going to get back to 120. We've just got to see what goes on as far as Truss and her Parliament, and naturally the Chancellor's, if he can get that, well, he didn't, I'm not suggesting he got it wrong, but if the market is saying that he hasn't got the support of parliamentarians, then maybe it's their time to move on.
Yeah, it's certainly a tough situation to be in. CPI, this is roughly a 30-year chart of the UK CPI, which gives you an idea of the pain that is being felt at the moment.
Yeah, velocity, that's just enormous, as you've seen in that period, you know, just enormous move in over that 6-month window, where we were going in the last 18 months to where we are now. And where does it stop?
Well, that's right. You look at like 12 months ago, it's sub 2%.
Yep.
So, and we're now at 10, and
we haven't faced the winter yet.
No. So it'll be interesting to see where that lands. But yeah, it's not a great looking chart by any means.
No.
Finally,
only if you're long inflation.
Well, that's true. Finally, we look at OPEC and crude. The oil price has been coming down sort of quite a bit, which was obviously great. It helps get the inflation down and helps the hip pocket a bit. But on the back of that, OPEC are looking to cut output. So.
Unbelievable. Tomorrow's the meeting. I was supposed to go over there to Vienna. It's the first time we're having actually a physical meeting versus online, so I was going to go over there. I go a couple of times a year to Vienna to the OPEC meeting. And it's interesting to hear, you know, the mood on the floor and what's going on with the ministers and so on. And as you correctly said, we had that pullback, and it was at 79 for West Texas Intermediate. And then the talk came out that they're going to cut it in excess, possibly over 1 million barrels tomorrow. And Asia went up 3% yesterday morning. It was just like boom this time yesterday, and everyone was long. And it was just a big early morning present for all the traders. So what happens over the next couple of days, maybe that million's already built in, or everyone's saying if you're a producer, they want higher prices. So really, where are we coming, you know, Christmas?
Yeah, and it's, I think,
and
higher,
the energy crisis.
Yeah, higher oil prices are probably the last thing that central bankers want. So.
Oh, everyone wants $40.
Yeah, that's right. So to really cut that inflation down even further, which is going to be tough, however they do it. But yeah, once again, plenty of going on. Got a lot of stats later this week out of the UK and the US, which will be interesting to see the impact.
Golden week in China, no trade this week.
Okay, good. Okay, so yeah, we'll keep an eye on those stats over the course of the week and regroup again next week.
Look forward to it. Thank you.
Okay, thanks, Pete.
Cheers, Andrew.
And that's the XM.com weekly market update.